All right. So, with that being said, my name is Kailash. For those of you that are here for the very first time, that are plugged in for the very first time, if you know nothing about me, I am one of the founders of this community, right? The Takeover Profit Arena. I've been trading now for the last, this year is going to be about 8 years that I've been trading. Help thousands of people, learn the skill of trading. Um, I'm contracted to companies to teach, their customers how to trade as well, send trades for their company and so forth as well. All right. I'm entrepreneur, been an entrepreneur basically my entire life. I'm also a business coach and consultant, so I help individuals build their business. I got a passion for helping people. That's why I teach. That's why, we are giving away this information for free here within this space to really help individuals to learn this skill. All right. So, with that being said, let's dive into everything here. For those of you that are beginners, I want you to put a B in the chat, right? We're going to talk a bit on this call, and my aim and my goal is to help you to move forward, right? To take you through this process and help you along, so that you are as efficient and as effective as possible with the platform that we have given to you guys. So if you're a beginner, put a B in the chat, right? Let me know, right? So that I know, where everybody's at, the majority, the masses. Okay, let me know. Keep dropping them. All right, keep dropping them. All the B's, all the B's, all the B's. Good stuff, good stuff. All right, keep dropping them in the chat if you are a beginner. All right, okay, I think that was probably enough time. If you are more intermediate, put an I in the chat. All right, put an I in the chat. If you're more intermediate, put an I in the chat. Okay, cool. We got a lot of A's. All right. All right. I see some more B's. Okay, cool. I'm not going to ask about advanced because this call is not specific for the advanced people then. Yeah. So this is for the beginners and the intermediate individuals in our platform. All right. So slightly seasoned. Okay, cool. So with that being said as well, I want to give you guys, I want to make sure first and foremost that you have, the right introduction to this industry. Whether you're a beginner, whether you're intermediate, it doesn't matter. I want to make sure you have first and foremost the right introduction to this industry and how you can be successful, within this space. Okay. Also, I want you to grab a notepad and a pen, get something to write with, get an iPad, get a laptop, get a smartphone, get something to write with. And when you've got it, put done in the chat, all right? Let me know that you've got it. All right, I don't want you to be dependent on, your mind, all right, taking in all this information I'm going to share with you. I want you to be a literal student and take notes, all right? Actually go through, take notes, write everything down that I say, even the things that I don't say, right? The things that don't sound like points are important. Everything that I say on this call is going to be very, very important, and I need you guys to be taking notes. All right, drop it down in the chat. Okay, awesome. See those done. All right, so here's the thing. All right, so firstly, all right, first and foremost, right, let's talk a bit. All right, let's talk a bit. I call these the keys to success in trading. All right. You guys should be able to see my screen. Let me know. All right. Let me know if you can see my screen. I call this the keys to success in trading. The thing about trading is, and the thing about success, period, in life, doesn't matter what space you're in, it really doesn't matter, right? It's always going to be 90% is going to be around the mindset, 10% is going to be around the skill set. Okay. So, some of you, you came into this space, you just want to know what to do. Guys, the thing is that I want to talk to you guys about how to think before I tell you what to do, right? Because how to think is more important than what to do. Yeah. Once you understand how to think, then the what to do becomes easy. You do the things that you're supposed to do, right? But if you're just focused on, what to do, what to do, which is the skill set, which is only 10% of success, right? Then you are shortchanging yourself, right? You're going to make it much more difficult. So write these down. First key to success is mindset, right? I want to ask you this question. What is your mindset on? Right? What is your mind set on? Okay, because your write this down. Your perspective, right? Your perception, sorry, right? Your perception equals your performance. Yeah, the way that you perceive a thing will determine the way that you treat a thing. So if you came into this space, it's a free community and you're just seeing it as a free community, what's going to happen? You're going to attach free to the value that you're getting when the value that you're getting is way more than free. If you treat it as free, then again, you're going to undervalue, right? You are going to underutilize the space and the access that you have. That's number one. Yeah. Number two, right, is trading is not a gamble. Yeah. Let me make that very clear. Trading is not a gamble. Trading is not chance. Okay. Trading is not, I hope that I become successful. I hope that I win this particular trade. It's not hope and pray. Right? Hope and pray is not a strategy with learning how to trade. Okay. Let me make that clear. Okay. With learning how to trade, I mean, yeah, you can ask God for wisdom, you can ask God for knowledge, you can ask God, to direct you and so forth, right? But the perspective that you have, if you see this as a gamble, if you don't treat this as an investment, that is what trading is. It is an investment. So you've got to treat it as such. You've got to treat it, as with the utmost importance. Do you guys know that this industry generates over $7 trillion every single day? Did anybody know that? Every single day, this industry of Forex generates $7 trillion, right? $7 trillion a day is generated within this space, right? So with that understanding, that I need to treat trading with the utmost importance. I need to treat this as something that could really change my life, right? This could really change your life. Like what industry you know about that generates $7 trillion a day? There is literally almost none, right? It is bigger than the movie industry, the stock market, the sports industry, all combined, the music industry, all combined, right? This industry is serious, all right? So I say that to say, like your perception of this industry will dictate and determine how you actually treat it. If you actually go through, right, the education, which takes us to point number two, knowledge. You got to make a decision that I want you to type this in the chat, right? I am a student always. I am a student always. Determine that you are going to become a student. Determine that you are going to learn, right? It is so easy to come into a space where, yes, you can make money, and the focus is just, all right, let me just make money. Let me just get to the place where I could just input a trade real quick. All right, guys, listen. I want you to write this down, right? Write this in your note. Write the word learn. EARN, right? Learn. I want you to remove the L and tell me what that word spells, right? If you remove the L, tell me what the word spells. It spells earn, right? It spells earn. Now, before you can earn, there's a reason why the L is before, right? Before you can earn, you've got to learn. Yeah. Before you can earn, you've got to learn. So a lot of us, we just want to get to the money. We just want to get to the dollar. It's like, all right, let me input a trade, but we don't know anything. Yeah, we don't know anything. Make a decision that you are going to learn this information. Okay? Make a decision that you are going to learn this information. Correct, Rico. I am a student always. I've been in this industry now for 8 years. I am still learning, right? I am still learning. It's not that, there's more information to garner, but I'm at the place of not how do I get it right, but it's now how do I not get it wrong? All right, how do I, what are the things that I can put in place that I can't get it wrong? Yeah. So it's a constant journey, it's a constant process of learning, right? And as you go through the information, let me give you guys some tips. As you go through this information, what's going to happen is that, different points, different things are going to stick out. Let me explain what I mean, right? The way that our minds work. right? The way that our minds work, at different points, our mind runs off on information, right? Like right now, some of you are saying, "Well, Clay, I don't agree." My mind didn't run off, and I'm still talking, right? So you didn't hear anything that I just said because your mind just ran off on the information, right? It's like when you're listening to maybe a podcast or you're listening to somebody speak. As they speak, different ideas pop up in your mind. It's like, and you drift off, right, on that thought. Say, "Yo, that was a really good point." What can you say right now really make a lot of sense, right? That's true. I remember, I was listening to this, and then it's like, yo, so your money just went off on that, and you didn't hear anything that was said. And this is why it is very important, right? Dawson minded. It's very important that you go over the information again, right? Repetition is going to help you significantly, right? Repetition, right? Watch this. Look, Kurt just typed the word again. Oh my goodness, so powerful. Look at this. Separate the A and the G for me, somebody, real quick, right? When you go over the information again, right, you get a gain, right? You get a gain. That's why it's important to go over the information over and over and over again. It's like watching a movie. Follow me here, right? It's like watching a movie. The first time you watch the movie, right? The first time you watch that movie, you were just watching it for what it is, right? You just took the information as it is. That was it, right? The second time you watch the information, anybody like this, like the second time you watch the information, you're like, I watched this movie before because I don't remember seeing this, right? That ever happened to you guys? Like you watched the movie, one time, the second time you watched it, and then it was like, I don't remember seeing this part, right? Because now it's not that, it's not new to you anymore. So your mind now focuses on other things. You start to look at the people in the background, right? I was watching that movie that I can't remember what Tyler Perry put out. I can't remember the name of it. And me and my wife, we rewind the movie because there was a part where the rain was falling, but it was like up to this point, you could see the road was wet, and right here it was dry. Right? So you start to look at different things, right? Then we were watching something else, and you saw the guy in the background. He's sitting in a restaurant with a champagne glass, and nothing is in the glass, right? It was like, that was actually very funny, right? Nothing was in the glass, right? Yes, I can't remember if that was what it was, Kurt, but nothing was in the glass. Like, so your mind runs off, and you start to look at other things that are happening. Okay, so same thing with information, same thing with when you go through the academy, right? You want to go over it multiple times because the first time it's new to you. So you're just taking it for what it is. The second time, maybe you started to implement some stuff, right? So now, especially for all the intermediate individuals on the line, you need to go back to the basics. You need to go back to that information now and go over it again, right? To see if you actually understood what it was, right? And then do it a third time because now you start to practice and so forth. Now you're checking back to see, if you're implementing things correctly. The third time is for mastery. The third time is for mastery. You guys following what I'm saying? Right? So don't just go through information once, speed through it to say, you know what? Oops, yep, I'm done. Right? To say, I'm done. I went through all the information. What next? Absolutely not. Right? Everything you need to know about trading is within the trading academy that we give you, right? All the important things, right? Because what we've recognized over the years is that a lot of platforms, they provide a lot of fluff, a lot of things that you don't need, like they just give you access to everything, it's like you got to sit and start and go through, and try to figure out what is it I actually need here and what is it that's irrelevant, because we just gave you the information that's relevant. Right? Like just going through that and telling you you can learn how to trade. I want you to put in the chat, right? And talk to me. Let me know how many of you have gone through the Trading Academy. Just put TA in the chat, Trading Academy. If you've gone through, are you starting to go through the Trading Academy? Put TA in the chat. If you have no idea what I'm talking about, you didn't even know that there was a Trading Academy, put NI, no idea, right? Put NI. And it's not to show you up, it's just ready to help you, right? Just let me know. If you were like, bro, listen, I didn't even know that there was a trading academy, right? I didn't even know that exists. I just thought that I was just to come into this community and hop on a call and I was gonna learn, right? Okay, cool. So far everybody knew that there was okay. So someone said didn't know there was one. All right. Okay, cool. So for that one person that didn't know, the first thing you want to do in our platform, go to the start here section, go through the getting started guide. Step number 5 takes you to the trading academy, right? Step number 5 takes you to the trading academy. So once you hit step number 5, right, it means go through the steps, all right? Hit step number 5 is going to take you to our trading academy. We got a full academy. It's not just calls, all right? So because we want you to be able to go through the information on your time at your pace, and these calls here are going to act as extra. All right, it's going to act as help. Okay. So here's number 3. Number 3 is risk management. Guys, listen, let me talk to you about this, right? Because probably a lot of you guys maybe don't know my story as it relates to trading. Yeah. The thing about awesome, right? The thing about trading is that this is the determining factor of whether you are going to be profitable or not. Please write that down, right? The way that you manage your risk is going to be the determining factor of whether you are profitable or not. Guys, the thing about trading, right, is that trading does involve risk, right? Trading does involve losses. If any trader tells you that they don't lose, they're lying. Right? If anybody told you, listen, I don't lose when I'm trading, you are a liar. Run, right? Run fast. Don't listen to anything they're saying because they're already lying to you. They lose, right? I win about 70% of my trades. Yeah? I win about 70% of my trades, right? Trading involves risk. So if you know that trading involves risk, you want to lose well, right? It involves losses, so you want to lose well. Okay. So risk management, write this down. 1 to 3% risk per trade. 1 to 3% risk per trade. That is your risk. Your losses are predictable. There's no loss that's going to stumble upon you like, hey, peekaboo, right? You are going to know before you enter a trade what you could potentially lose and what you could potentially gain. So don't be fearful when you step into these markets because it's nothing that's going to wipe your entire account, right? If you do the right things. Okay. So 1 to 3% risk, write that down. That is a major, major key, right? I'm gonna share my story on this real quick. Guys, when I first got started, someone said this to me, 1 to 3%. Been in business my entire life. I'm accustomed, taking risks. I'm accustomed, losing. I'm accustomed gaining. Yeah. No risk, no reward. That's my mindset. I came into this industry of trading Forex and it had the same mindset, had the same perspective, right? And it humbled me, right? I was taking 50%, 40%, 80%. Sometimes I took 100% risk in one trade. Why? Because I always was looking at the upside potential and never what the potential the potential was for loss. Right? I never looked at what it could lose. I only looked at what it is that it could gain. Guys, that is poor. You don't want to do that, right? Know that it involves risk. So at any time if I do lose, I lose well, right? It's not like oh my goodness, oh my God, all right. It's always like all right, cool. That was max 3% of my account, right? You put $500 in an account, $3 3% risk. That's $15. If you lose, you're not tripping, right? I have somebody say, heard someone say earlier, man, they don't know this trading thing is for them because, they took too many losses. I told them, listen, hey, listen, show me your history. Saw the history. You're doing madness. Risking 30%, 50% per trade. But what do you expect? Right? You're not giving yourself enough time. Okay, especially you're new. You want to give yourself enough time to see results. I know what that is like, guys, right? Because you hear that 1 to 3 and you'll be like, that's all right, that's all, right? You they're trying to my thought process. I know some of you on the line probably had this thought just now, was like, bro, 1 to 3%. I'm trying to make money though, right? That was my thought, right? And as a result, it caused me to lose 8, right? Let me help you. 8 trading accounts I lost. Put $1,000 in, boom, lost it. Another $1,000 in, boom, lost it. Another $1,000 in, boom, lost it. 8 times over until I learned the lesson. I was like, bro, all right, this ain't that. This ain't that, that type of investment. You got to actually learn something here, right? And the first lesson was, bro, you got to be able to manage your risk well because you're gonna lose. I know traders. Grab this last point I'm gonna make on this. I know traders, right, that are super accurate as it relates to the market. They can tell you when the market is going to sell, buy, when it's going to consolidate, where it's going to sell from, where it's going to buy from, but they're not profitable. They're what you call great analysts. They're not great traders, all right? Because you got to be able to manage your risk well, guys, right? Because they go on, they might win 95% of their trades. I lose that one, but that one lost the entire account because they have poor risk management. You guys following me? Right? Let me know in the chat if you're following what I'm saying. Right? Because these points is super important. Remember, I said these are the things that you should be taking notes on. Right? Remember that Kai said to you, risk 1 to 3%. You're gonna hear me in your sleep. Risk 1 to 3%. The only reason you can't put your phone down when you're trading is because your risk is too high. All right, listen, I know I'm talking to some of you, right? Because that was me. I was going to sleep with my phone in my hand like this, right? Akeem, we were going to sleep, bro, with the phone in our hands like this, right? Because we know that the risk was too high, right? We know that if we lost, that we won't feel good about it. Guys, use proper risk. Yeah, use proper risk management. That's what I'm saying to this, guys. I hope, man, that you guys, that are really taking what I'm saying. And you don't have to go through the lessons like I did. We were believing, right? Listen, you're not gonna pray so hard. Listen, you're gonna pray so hard. When you risk too much of your account, are you hoping it turns around? You're like, Lord, if you let me get me this time, I can do it again. I can do it again. Right? I gonna do proper risk management that time, right? I can do proper risk management that time. Here's number four, right? Number four is discipline. Discipline is that ability to give yourself an instruction and follow it. All right. Like after this call, I tell you all these things, right? But after this call, you got to be able to say, you know what? Listen, you see that 1 to 3%, I'm actually going to implement it, right? You got to listen to right? Because nobody is there to tell you, right? The mindset, you got to understand this is an investment. This is not, you're just taking risks. The knowledge, you got to actually go through the education. You got to actually plug into the calls. We are here twice a week for an hour, 2 hours out of your busy life. We are here, right, to help you to learn a skill for free, right? For free, right? I do one-on-one sessions with individuals. Of course, they're gonna pay, right? You get it for free, yeah. So plug in, yeah, utilize what it is that you have, right? Utilize what it is that you have, and have the discipline to do what's necessary to be consistent. I'm gonna give you guys this last key as it relates to your risk. When you decide if your risk is 1, 2, or 3%, stick to it. Don't fluctuate your risk, right? Sometimes you say, you know what, this trade hit, we hit on this trade, then boom, we hit again, boom, we hit again, right? We're on this winning streak, right? And then the fourth trade, because every other trade you use 1%, it's like, oh man, the guy's on a winning streak, right? Win, win, win. So what's gonna happen this fourth trade? Let me throw up my risk, right? I'm gonna risk 10% this fourth trade, and that's the trade I loses. All right, discipline. Okay, discipline. And here's the last one. This one is patience, guys. Patience. I like to spell patient, P-A-Y, patience. All right. Patience will get you paid. Okay, patience will get you paid. I've seen so many individuals come into the space of Forex, right, to learn how to trade, and they don't see the results that they want to see. You know why? Because they don't give themselves enough time. Well, you're right at them. All right. They don't give themselves enough time. Persons quit too soon. Right? Persons quit too soon. Right? Because your results and someone else's results, when you're looking at testimonials chat, you can't compare yourself to other people. Right? Celebrate them, celebrate their success, but don't compare to them. Right? Because you don't know what their journey was like. Right? You don't know, what it is that they went through. You don't know how long they have been learning. Guys, write this down. Time. It stands for things I must experience, right? Things I must experience, right? There's just some things that you're going to have to experience. There's some things that we can't teach you. There's some things that you can't, that can't be taught, right? There's just some things that's going to have to be caught, right? You're gonna have to catch it from the experience that you go through. Right? I mean, making sense here, guys. I hope that made sense, guys. Drop the 5 keys. All right. Let me see who've been paying attention. Put the 5 keys in the chat. For those of you that have been paying attention and plugged into, what it is that I've been sharing with you guys. Give me the 5 keys to trading. All right. The 5 keys to success in trading. And it's gonna say the 5 keys to success in life. Right? Drop them in the chat box. What was the first key? Put the first key in the chat. First one. First key. Mindset, right? Mindset. What was the second one? Knowledge, right? Knowledge. What was number three? Risk management. How much are you going to risk per trade? How much are you going to risk per trade? 1 to 3%. You're on to 3%. What was number four? What was number four? Discipline. Okay. And what was number five? Patience. All right. Patience. Perfect. I want you guys to remember these things. Remember what I shared with you. Like I said, I hope you guys took notes, right? Because these are the things that are really going to help you, throughout this journey. Okay. So, with that being said, all right, let's dive into, some of the what to do. We spoke about how to think. Now let's talk a bit more about, like what to actually do. Okay. Now, here's the thing. All right. And I'm going to make a lot of stuff make sense as you go through this process. Um, Let me know you guys can see my screen here once again. Can you guys see my screen? Is this clear? Right. All right. So what I'm sharing here with you, right, is I'm actually going to send this. I'm going to send this. I think I'm going to send this to you, right? I'm going to let you know in a bit. But these are some like check marks, right? As you go through the information, like things that you want to make sure that you have learned, right? You want to make sure, of course, you spoke about mindset, right? Make sure you get the intro to Forex, right? We're gonna go through this on the call actually as well, right? Market hours and the market participants. Make sure you understand currency pairs, right? Make sure you understand how to utilize MT5. Okay, make sure you understand how to utilize TradingView. So let me just make this clear. MT5 is the platform you actually trade on. Okay, TradingView is where you actually do your analysis of the market. Okay, so MT5 is where you actually do the trading. TradingView is where you will do your analysis of the market. All right, number seven, understanding pips. Yeah, this is going to be very vitally important for you to be able to calculate your risk. Understanding pips and understanding loss. It's going to be vitally important for you to understand how to calculate your risk. So that 1 to 3% that I spoke about is going to come, all right, into use when you step into this area right here. Okay. Uh, Number nine, understanding take profits and stop losses. Number 10, understanding basic order types. Okay. Understanding risk management and having a trading plan. Calculating your risk, right? Of course, calculating your risk. And then last but not least, the types of analysis and basic market structure, right? Here's what you guys do. You can actually screenshot this, screen grab it, so that you have it, you can look through and you can see, okay, at different points, where am I actually at? Am I at number one? Am I at number two, number three, four, five, six, seven, all of this, I want you guys just by looking at this, put in the chat like where you're at, right? Like put in the chat where you're at. Are you stuck on understanding pips, understanding lots, trying to understand take profits and stop losses, understanding the basic or the types? So like where are you at in this process here, right? Are you past all of this, and at the point of trying to understand the types of analysis, or are you at number 14? Whereas it's like, all right, I'm trying to understand market structure now at this point. Like I've got everything else down. Like, where are you at? I want you to identify that. Like, where are you actually at in this process? Okay, because it is quite a bit of information, but like I will always share, everything that we share with you guys, it is going to be connected, right? Everything is going to be connected. You will not get information that is irrelevant. You will not get information that um it's just applicable for a particular area. Everything is connected, and you want to treat it as such. You want to treat it as, okay, cool. It's like, let me put it like this: we're laying foundations. Yeah, we're laying bricks. It's brick upon brick. It's not put a brick here and then another one over here. No, everything is brick on brick, right? From the mindset to the introduction of Forex to the market hours and participants, right? To currency pairs. I know some of you, be like, okay, what's the relevance of market hours and participants? We're going to talk about that right now. I'm going to help and show you guys exactly how it is relevant, right? And why it's important. Currency pairs, we're going to talk about that as well right now, all right? Introduction to MT5. If we can get through that too, I'll share that with you guys as well on this call. We're gonna cover a bit now, all right, on this session. So if you're ready, put ready in the chat. All right, I know we already covered quite a bit so far, but again, like I said, that was how to think. Now we're gonna go into like some what to do's, all right, some need to knows, all right, some things that nobody told me at the very beginning that we had to figure out. All right, perfect. All right, so. Again, let's jump into it. All right, let's jump into it. So I'm glad to see you guys paying attention. Oh, we up that. We up to 70 persons on the call. That's great, man. It's great. It's great. All right. So like I shared with you, I already told you guys that the forex market, generates $7 trillion a day. Okay. The forex market generates $7 trillion per day. Now let's talk about this, right? The forex market participants, right? Understand this for all of you, whether you're advanced, beginner, intermediate, it doesn't matter. Understand this. We are not major players in the market. We don't control anything, right? We are what you call retail traders. Okay? We just respond to what's happening in the market, right? The movers of the market are the central banks, the commercial banks, right? The institutional investors, the corporations, right? So when we talk about, obviously central banks, we're talking about the US Federal Reserve, we're talking about the European Central Bank, we're talking about banks in Japan, right, et cetera. Commercial banks, you already know the typical commercial banks, JP Morgan, et cetera, right? Those banks, the banks are the players that move the markets. Okay, when we speak about corporations, right? Like Apple, Toyota, Microsoft, when they're making major transactions, remember it is foreign currency, right? That's why the stock market is times smaller than the forex market. The forex market is about 10 times the size of the stock market. Why is that? Think about it. Because to participate in the stock market, you need money. We are in the money market. Everything in this world requires money. If you want to make, large transactions, guess what? You don't do it via stock. You do it via money, dollars, foreign currency. When you got to make a transaction from Barbados to the United States, you got to use US dollars. If you want to make a transaction from the US to Europe, you got to use the pound or euros, right? You got to use euros. So you're going to operate in different currencies, right? So that's why these major companies move the market. Yeah, that's why these major companies move the market because the amount of money being transferred, right? The amount of money that's being conducted, in these business transactions, right, cause, major fluctuations and so forth in the market. Then we got the governments, of course, right? We got the governments, playing a significant role, like the value of a dollar, what's happening in the economy, all those different things, right? And it's important we understand these things, yeah? The brokers and the dealers, these people move the markets. We are here as mere participants, all right? So with that information, I want you to write this down. We don't look at the markets like retail traders. We don't treat the markets like retail traders, right? And what do I mean by that? The masses. Yeah, the masses. The masses. You don't want to do what the masses do. I was going to use a different term. You don't want to do what the masses are doing. You don't want to follow the crowd. Yeah, the masses. The information for retail traders is out there. That's why you hear some people say, man, listen, I'm gonna go and learn on YouTube or go and learn on Google. The banks want you to have that information. Let me show you what I'm saying, right? Look at this, right? Forex patterns. Yeah. You can go on the internet and see, boom, these are some Forex patterns. This information is accessible because the banks want you to have access to it. Because this is how retail traders look at the market. This is how the average person is viewing the market. You don't want to be average. All right. You don't want to be average because right this now, the banks, the hedge funds, the large financial institutions, right? They're all doing two things. Write this down. Two things. Number one, right? Number one, they are rebalancing the market. That's number one. Number two, the real important part here now is that they're also manipulating the market. We call it seek and destroy, right? They're manipulating the market. So understand this. No, 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 talk to me, guys, right? If I know that the banks, the brokers, the hedge funds, these major companies control the movement in the markets, why am I trying to trade and analyze the markets like the typical Forex retail trader? Am I not going to take on the perspective of the person that is controlling these movements? Y'all tell me, tell me, tell me. Would you not want to trade like how the banks trade, or would you want to trade like the average retail trader? Man, I could go on Google and I could go on Baby Pips and get information on trading apps, right? But when you finish, I'm telling you, I promise you, you're gonna be trading like the average person. You're gonna be trading like the retail trader, right? Let me know. Let me see. Let me see in the chat, right? Everybody following me though? I want to make sure you guys following me. All right. I want to make sure we clear. I want to make sure you grasping this. And I'm not just talking. Okay, because again, all of this is going to help you with your perspective. Remember, I said the first thing, your perception, right? Your perspective equals your performance. So I'm helping you with the way to see the market first. Because once you understand how to see this, then everything else, is going to fall into place, right? So now when I'm looking at the market, I'm looking at the market through the lens of how can the banks manipulate the masses? Hmm. If I was the bank, what would I do? Right? So now the lens now you start to look at the market through because they're the people that control the market. Right? This concept, it is called smart money. Write that down, keep it in your back pocket for the future. Right? You're gonna get that when you get into the advanced section. All right. It's called smart money. We are trading smart money. You're not trading dumb money. Dumb money is retail traders. You're trading smart money. Yeah? Smart money and smartphones go together. Absolutely, right? Absolutely. We're trading smart money. All right. So we understand this, right? You guys understand that yes, we are retail traders, but we don't think like retail traders. Okay. Next thing, all right? That a lot of people, they got have a lot of questions about, they don't know, what to actually do with this information. All right. So let me help you guys here with this information. All right. The markets, there's actually four trading sessions. All right. Number one, there's the Sydney session. All right. There's the Tokyo session. There's the London session. And then there is the New York session. Okay. The Sydney session is when the market actually opens. Okay. The Sydney session is when the market actually opens. So what does that mean? It means that at 5 p.m. Eastern, which is 6 p.m. our time, right? That's when the day will change in the Forex space. If you enter a trader right now, the date is going to say tomorrow, right? The date is going to show the 17th. It's not going to show the 16th, it's going to show the 17th. Okay? Because that's when the day changes. Okay? Everybody understands that? That makes sense? So this is the actual opening of the Forex market is the Sydney session. Now, understand that you may see Sydney session and Tokyo session. Like sometimes persons would say, call this one session, which would just be like the Asian session, All right, they just combine the two, Sydney and Tokyo, because they overlap significantly, in terms of time, right? But if you want to be technical or very specific, one is the Sydney session, opens at 5 p.m. Eastern and closes at 2 a.m. Eastern Standard Time. Okay, 5 p.m. Eastern closes at 2 a.m. Eastern Standard Time. Now, it's important, guys, that in these sessions, there's certain currency pairs that you want to be trading. Why? Because in these times, this is when we have volume in the market. This is when movement is taking place, right? So we want to know when the movement is taking place, right? We want to know when the volume is happening, and that's when we want to trade particular currencies. So, for example, in the Sydney session, trading a US pair. What am I trading a US pair? The markets are closed. Right? Like look at the market through this lens. Think about it, right? The banks are closed at 5 p.m. Eastern. I mean in the US at 5 p.m. the banks shut, right? In the US. Why are you trying to trade a US currency at that point? The movement is going to be very slow, guys. So it's going to help you when you start to look and see, okay, what currency should I be actually looking at in this time period, right? You want to look at the Australian dollar, the New Zealand dollar. So you can look at, like things like the euro to the Australian dollar, the euro to the New Zealand dollar. You can actually trade now, right? So let me stick up in here. You can actually trade, like AUD to the US dollar, at that point, that's fine because you're gonna have movement on one of the currencies. Okay. So that's the main aim. The main thing is that whatever I am trading, I want at least one of those currencies need to be active in that session. If I have two currencies that are not active, then you know what that means. Little to no movement, right? Little to no movement. Am I making sense? All in the chat, AC in the chat if you're all clear. Right? I don't want to be just going through and you're not clear on the information. I mean, it's simple, right? But these things people tend to take for granted, and then afterwards they're asking questions that you know that the information is there. You know what I mean? I was given. Okay, good. I see everybody's all clear. Perfect. Now, here's the next thing. At 5 p.m. Eastern, when that day changes, right? I know some of you probably experienced this last week. When the day changes between 6 p.m. our time, but they say 5 p.m. Eastern, when the day changes, there's something called a spread that increases. Okay? And this is like what the broker uses, to charge you commissions, right? So if the spread increases and it could affect you in the way that it could cause you to get knocked out of trades unnecessarily. Like the market didn't go there, but the broker spreads came into play. Okay. So you want to pay attention to these things. Spreads will usually happen on standard Forex pairs. All right. So all the currencies, all right? Except things like commodities like gold. Okay. Gold is just going to close for that hour. Gold is going to close from 5 p.m. Eastern to 6 p.m. Eastern. No movement is going to happen on gold in that time. Everything else, you're going to see the spreads be massive. So what I want you guys to do is that at 6 p.m. tomorrow, not tomorrow, all right, at 6 p.m. on Monday, right? Look at the market, look at the spreads and see what happens, right? Go up here, like euro to the New Zealand dollar, GBP to the and New Zealand dollar, you're gonna see the spreads get big, right? You want to be one, not in the market at that time, right? Don't be in the market at that time. Try not to be in a trade at 5 p.m. Okay? Maybe somebody told me that. All right. I got exposed, harshly. All right. Hard. It was harsh. I was like, what is going on? Right? I got exposed rough. So you don't be in trades at that point. Right? So next thing, when we look at the Tokyo session, that is open from 7 p.m. Eastern to 4 a.m. Eastern. All right. 7 p.m. Eastern to 4 a.m. Eastern. Japanese yen, the Australian dollar, New Zealand dollar is Tokyo. I mean, of course, you're going to be trading Japanese yen. All right. London session, 3 a.m. to 12 p.m. Eastern. I want you to see these times. So for all the early birds, yeah, like you wake up super early on mornings, London session is for you. Euro, right? The euro, the pound, the Swiss franc. That's for you in that market. Okay, those currencies are open and active. Okay, then you have New York session from 8 a.m. Eastern to 5 p.m. Eastern. Right? Remember, like think about it. It's when the banks open, right, in the U.S. And this is when we're mostly in the markets because that's when we are weak. Okay, so you determine, right? This is U.S. dollar, the Canadian dollar. You also be able to trade things like gold. You also get movements on gold, within the London session as well, right? So really pay attention to the currency that you are trading in the time, right? In the particular session of the market. Okay. It don't make sense trading pairs that don't move. Right? You trade pairs that move. Okay. We trade pairs that move. Now, the next thing that's very important is what's the best time now to trade? All right. What's the best time now to trade? Like when is the time that I want to really be in the market? One of the best times to trade is in that London session and New York session overlap. What do I mean? It means that both the London session and the New York session are open at the exact same time. That's where you have volume in the market. That's when the market is moving. That's when you want to be trading, right? Because both London and the US, right? Both Europe and the US are open. The banks are open, right? If the banks open, right? If the banks open, then volatility, action, yeah, action. Okay, guys, this information is in the university, right? Just all right, it's in the university. Okay, now watch this. So we got the euro, the pound, the US dollar, right? All those currencies, moving at that time. Now, let me show you what I mean. All right. Remember, New York session opened from 8 to 5, right? So up until when the London session overlaps at 8 o'clock, straight to 12. So you see that 8 to 12 window? Action. All right. That's when I'm trading. That's when I'm in the market because it's like, yo, that's the time that we got volatility, we got movement, we got things happening, and that's what we want. We don't want to be in a trade for a super long time, like market not doing anything. That's what you call a waste of time. You want to be trading pairs that are moving. Okay, you want to be trading pairs that are moving, right? So the London session, New York session overlap, and the Tokyo to the London overlap as well, right? So when we look at the Tokyo session, you'll see that it overlaps, right, with the London session at 3 a.m. So 3 a.m. Eastern, which is like 4 a.m. our time, action again, right? It's not overlap when both markets are open. It's when you get movement in the markets. Everybody following me? All right, you see the chart, you all clear? You see the chart, you all clear? Yeah, perfect, perfect, perfect. Good stuff, right? So I'm giving you things that people already tell you, and yes, the information is there, but I'm break it down and give you from, an experience standpoint as well. All right. Now, here's the next thing. I'm gonna give you a little, not a hack, but just some help. All right. If you want to see, oops. All right. If you want to see like what currencies are like moving and have activity, or if they're strong or weak, you could go to this website. It's called FX Blue, all right, fxblue.com, and go to market data currency strength, right? So you want to look and see, okay, the strength of a currency. Okay, so two things we're looking for: you're looking for a currency that is strong, and you're looking for a currency that is weak, right? That's how you know that there's movement in the market, right? So, for example, here we can see strength on Bitcoin, and we can see weakness on the US dollar. What should be happening right now is that Bitcoin should be going up, right? We can see strength on the New Zealand dollar, and we can see weakness on the Canadian dollar, for example, right? What should be happening is that NZD versus the Canadian dollar, this should be going up. All right. So let me prove it. Like, this was a pre-plan. So let me see. Right. NZD to the Canadian dollar should be going up. Right. Boom. All right. So you see how we got this big push here, right? Our market going up here again. Yeah. Like it's going up. All right. Like you can't dispute that fact. We also mentioned NZD to the US dollar, I believe. Right. So we got big push up, market going up again. All right. So this tells you, shows you where the strength and the weakness is in the market, right? Right now we should probably be getting like some little pullback or something on gold, right? Yes, not much, right? Because you see here, there's not much strength, there's not much weakness going on with these two currencies, okay? So if you look at euro to the USD, we may be seeing consolidation. Yeah, market may be just going sideways. Yeah, all right, market just going sideways. There's not a lot of movement. Okay, so those things you want to pay attention to. You want to trade currencies that are moving. Okay, I remember like this is not the time to really be trading a US pair. This is not that time. It's not that session. Okay, it's not that session. USD to the Swiss franc. Yeah, no, it should be no movement either. That's one of the slowest pairs ever. All right. So market being consolidating, being sideways. Yeah. So, like that's some keys, some help here. You can look at it on a short-term perspective, medium-term perspective, long-term perspective, and see overall like what is going on. Okay. So that is fsblue.com. That it's just a quick hack. It shows you what's going on, and you can see, okay, well, this is the currency that I should, be taking a look at in this time period. New Zealand dollars will got the strength. Japanese dollars will got the strength right now because we are in that time. The markets are active. All right, the currencies are open. All right, markets are open for these currencies. Sorry. So hoping that makes sense so far, guys. All right, you put it two and two together. It's not because that's the gap that I really want to bridge for you guys. That gap between information and implementation, right? Now, where do we actually implement, a lot of this information? Because we get the market hours, okay, cool. Where do I actually put that? We get, the best times to trade, okay, like what does that even mean, right? What currency should I be trading, etc., right? So we're now taking a look at what is traded in the forex market, right? The different types of currency pairs. As you guys know, we got major currency pairs, which would be simply two major currencies. Okay, so those major currencies, whoops, all right, those major currencies like the euro and the US dollar is a major currency, all right? The pound and the US dollar is a major currency. The US dollar and the Japanese yen, major. The dollar and the Swiss, the Australian dollar and the US and the Canadian, right? Those are all major currencies, so we consider them to be major currency pairs. Now, we have also minor pairs, right? We also have minor pairs, okay? We also have minor pairs. So actually, let me say this first. All right, there is the base currency, and then there is the quote currency. All right, the base is the first currency, the quote is the second one. Yeah, the base is the first currency, and the quote is the second one. All right. So basically, like if you were here, for example, the price of a currency pair tells you how much of the quote currency is needed to buy 1 unit of the base, right? So if we go, for example, and we look at the market, we can see, let me just take away some stuff for y'all, all right? Let's go to like euro to the US dollar, okay? Euro to the US dollar. I know persons get scared when they see a chart. Anybody like get intimidated when they see a chart? For all my beginners on the call, if that's you, put yes in the chat. At the beginning, when I first saw a chart, I was intimidated too because I remember graphs at school. Right? I remember plotting points. And I remember like failing that miserably. I remember that giving me headache in CSD exam. I was like, bruh, this plotting points thing. I was just like, oh my God. So yeah, I see everybody saying yes, yes, yes. Cool, no problem. I'm gonna make this make sense to you as well. Okay. So remember, we're just talking about the value of basically the currency, right? So simply put, like this is euro to the US dollar, right? Euro to the US dollar. If you look here to the right, we'll see that it says here that current price, because to the right, this is just price, okay? Current price is 1.03013, right? Remember, we trading Forex, so we see everything. We see all the small movements in the market. We see everything, right? So this is just saying that 1 euro is currently valued 1.03026 US dollars. And that's what will be required to obviously purchase it. Okay. How we know this? Like you could go to Google if you want. Euro to euro to US dollar. 1 euro is 1.03 US dollars. All right. So you see that this fluctuation here, all that happens is that when we go on TradingView, we see the entire movement. We see everything. We see all the movements. All right. You guys, beginners on the call, you ever been into the bank and seen the numbers like similar to this right here? Like just moving up and down behind the teller? Right? You're just seeing different currencies just changing value, or maybe you traveled, you went to Cambio, maybe, you went into you went to change money, like you see the currency perfect. It's the Forex market. In case you didn't know, that is the Forex market right there. All that's happening is as opposed to seeing numbers changing in value, we see the actual movement via what we call candlesticks, right? Via these bars, quote unquote, on the chart. That's it, right? That's it. So, for example, if I had to change it to a line, like it just looks like this. Yeah, we just represent it by these candles. Okay, so you can actually see all the movements taking place. They go up as they come back down, as they want to go up, and come back down, that kind of stuff. So that fluctuation is constantly happening, right? We actually see all of those movements. Am I making sense? All right, am I making sense? And based on all of those movements that are occurring in the market, right? All that's happening is that we make decisions here, right? We make decisions in the industry of whether we are going to buy or sell a particular currency, right? That's it. We make a decision whether we're going to buy or sell a particular currency based on different patterns, based on what the banks are doing, the financial institutions are doing, based on an analysis of what's going on in the market. All right, that's all that's happening here. So to the right here is price. At the bottom is time. If you look here, you'll see time. Okay, you'll see the time. Yeah. So you see the date and the time from the 15th of January here, right up to right now, which is the 16th, right, and so on and so forth. You're seeing the time. Okay, that's all. So the market moves, yeah, the market moves, and most times it's going to be diagonal because we're moving with time, right? It ain't gonna just go up, we're moving with time, so it's going to be diagonal, right? I mean, once you understand that, it's like, okay, things making more sense, right? Now, in that saying, so as to, like dumb this down, is when we look at this chart, right? When we look at this chart, you can look at the chart on multiple time frames, right? So let me actually stick a pin at this point. If you don't have a trading view account, all right, there's also, you could go through the getting started document. It's there. You could click the link, create an account, all right? Make sure you have a trading view account. Yeah, because this is where you're going to spend your time doing analysis and so forth of the market. Okay, everybody got that? All right, make sure you have a trading view account. This is where you'll be at doing analysis and so forth. You don't want to be doing that on your phone. Like have a bigger screen for sure. Like if you got a tablet, even, a laptop, something, do the analysis on a bigger screen. You want to have a bigger screen. Okay. All right. So trading view, like I said, no. You can look at this on different time frames, as we start to wrap this up. You can look at this on different time frames, right? Whereas I'm gonna touch one more thing and then we're gonna wrap it up. Right. If you go, for example, to the weekly time frame, yeah, all that's happening is that one of these bars is showing up one every week. Okay, that's it. One every week. All right. One of these candles is showing up one every week. If you go to the daily, then you just see one every day. So this right here is now the 17th. Remember I told you guys the day has changed, right? This is now the 17th. This was the 16th, right? This was the movement for the 16th. This was the 15th right here. This was the 14th, right? This was the 13th, and so on and so forth. All right. So all that's happening, guys, is that when you go to this chart, every time frame is like you put in a magnifying glass on the area. Okay, let me explain. All right. It's that you getting more details of a particular area. All right. So for example, this right here, all right, put a horizontal vertical line. All right. This right here was midday. All right. So if we click 4 hours, there's about 6 candles, in that 4 hour time period. Sorry, in that daily time period. So you're gonna see 4 hour candles in that daily candle. All right. So from here, right away to this point here, all right, is our 4 hour candle. So it's literally you're just taking a closer look, getting more details on what is going on. All right. All right, hold up. I wanna show you guys something here real quick, but this is not effective right now. All right. So from here, literally to this point, right? This is that 4 hour movement. Okay, so it's like 4 hour candles in that time period, right? So if we drop down to an hour, we just get more information. Yeah, there's 24 1 hour candles in a 24-hour time period, right? In a day time period. So if we come down to the 15-minute, we see more information, right? That's all that's happening here. Yeah, you're just taking the magnifying glass and spotting it on the area to see more data, to see more information. Did that make sense? All right, did that help somebody? All right, somebody beginners on the call. All right, did that help understand? Okay, cool. At least I understand what all of this jazz is. All right. No, making more sense. No, right? No, it's not just bars. I'm actually seeing movement, right? I'm just seeing more movement in that time. Okay. That's all it is, right? So from the 1 hour to the 4 hour to the daily, it's just showing you more movement in that time period. Yeah, whoa, Raquel. All right. That's all that's going on. Okay. So we grab that, we understand that, then we do analysis based on what's happening in the market. So what's happening is that from the bigger time frame perspective, right, it's like you're just getting an overview of what's going on. Yeah. The 4 hour starts to show you some details. Yeah. The 1 hour gives you more details. All right. The 15-minute, you get even deeper into it. That's all that's happening. Right. So I hope that makes sense to you guys. Right. There's one more thing that I'm going to touch on this call. Let me know, like, so far, like, has this helped you in any way, shape, form, or fashion? All right. Has this helped? Because I see, some individuals is still trying to like they say they're still trying to get a grasp on the information, right? I know it can be a lot of information, but I want to connect it for you. Right? I don't want it to just be information. I want to help you connect the dots. Like, where is this useful? Where can I use this? How can I actually go about, utilizing all of this? Where do I actually apply it? How do I input, that kind of stuff, right? So we got you guys could go through this. We got cross currency pairs like euro to the Great Britain pound, GBP to the yen, Australian dollar to the euro to the Australian dollar. Then we got exotic pairs, right? We don't share a lot of exotic pairs. I used to back in the day, pairs like the South African rand, the Turkish, lira, right? Those are exotics. Okay, you can trade those if you want to. We say don't touch them as yet until you understand basic things. Like, don't go around exotics. Okay. The exotics, will skin you up, right? Don't go around exotics like that. Okay. And then of course we have commodities, right? We trade commodities. You got metals, right? Like gold, you got silver, right? You got energy, you can trade oil, okay, as well. You can also trade like coffee, you can trade soybean, you can trade corn, like you can literally trade all those things in MetaTrader as well. All right, and you can trade indices, all right, things like US 30, all right, the Dow Jones. Some of you probably would have seen this, like on your anybody watch like what do you call it, Bloomberg? or like CNN. And you see like all the things come across the bottom. You have no idea what they are. You hear about the S&P 500. You hear about NASDAQ. Anybody ever heard about them before? Are we like super clueless? Anybody? Yeah? Okay, cool. All right. So you can trade these things. Yeah, you can trade S&P 500, US 30, NASDAQ, US 100. Like those types of pairs, like those types of let me say indices, like you know, make sure like let it be gradual. Don't go there. Don't jump there. Right? Don't jump there. That's a gradual. It's like you're going from level one to level 10. Go through level one, level two, level three. Don't take that jump. Yeah. It's a process. Okay. Then we got European indices like the DAX 40, all right, or GER 40 or GER 30, all of those. Then there's some Asian indices as well, right? Like there's a lot that could be traded basically within this space. Okay. Now, last thing I want to touch on with you guys is these standard forex pairs, all right, as it relates to pips. Now, I went through this and have a recording on it, all right, that I think I'm gonna post it back in the chat. Let me see if I have it here on my YouTube, right? A recording on pips. We did a phenomenal session on pips. This is your homework. I want you to go and watch. I want you to go and watch the recording on pips. All right, taking you guys in behind the scenes. All right, this is where all the videos are at, unlisted. All right. We didn't go through that. All right, right here. Pips loss and calculating daily bias. All right. Pips loss, calculating daily bias. I think that was a good session. All right. Make sure. Yeah, I believe this is it. So that session was 2 hours. Y'all see it here, right? So you want to plug in. I'm gonna send this to you. Okay. Send you guys just a link on this call. So for those of you who have it. I also posted it in the chat as well. All right. I also posted it in the chat with the live education, but I know some of you guys are new, so you have to repost all those recordings as well. Right. But this is the video to watch here on Pips. All right, Pips and also basic order types and so forth. I think all of that is in this video. All right, so just send it to you in the chat. Make sure you save it. All right, let me just emphasize the importance of it and why you want to go through this and understand it. Okay, like I know this part requires a little math. Some people don't like math, so some people stay away from this. All right, but I want you to see this like counting money. Imagine if you didn't know how to count dollars. How much of it you think will actually come to you? You don't know how to count. You don't know how to look at money and be able to see, okay, this is 20, this is 40, this is 60, this is 80, this is $100. All right. How much money do you think you would actually have if you didn't even understand how to count? How much money would you think you would lose? How much money you think you would blow, right? Not being able to count. How many times do you think people would rob you not being able to count money? All right. Like Kurt said, you would never be able to buy or sell anything because you don't know how to count money. That's how important pips are. All right. Understand it. It's like a unit of measurement for trading. It's like dollars and cents for trading. All right. Understand how to calculate pips. Yeah. Because if you don't understand how to calculate pips, you don't know how to calculate your risk. All right. You don't know how to calculate your risk. So it's important that you understand this. Okay, we give you a full detailed breakdown here in that video that I just sent you guys. Everybody got the video? Let me know. All right, posted the link, save it, copy and paste it, put it somewhere. All right, make sure you understand it. Perfect. All right, make sure you understand it. Go and watch it. All right, don't just see it here. I know at this point some people are clocking out. Because we approaching 9 o'clock. Some people, they're going down. But when you hear me for the next like 3 minutes, all right, understand pips. All right, understand pips, understand how to the difference with the standard Forex pairs, how to count them, and also with JPY pairs, right? And then also with gold, understand how to calculate pips for gold, the JPY, right? Because it's different with commodities, it's different with JPY, it's different with the standard Forex pairs. All right, so it's the understanding how to calculate dollars and cents. Okay, be able to do that. Understand how to calculate pips, guys. Okay, like I said, you will need it if you want to understand, all right, how to calculate your risk. The second thing is going to be your lot sizes. And this part is actually pretty simple. Don't get caught up in the 100,000 units and all that, all right? Like this part is kind of irrelevant because you don't ever use it. Okay, like that. This part right here is irrelevant. The main things to understand, just understand this. Okay, so very simply put, a micro lot is a 0.01 lot size. The value of a micro lot is 10 cents, right? 10 cents per pip, all right? 10 cents per pip. I just posted the link down. If you scroll back up, you see the link here. I posted the link, all right? 10 cents per pip is 0.01. That's it. So per pip, per movement in the market, your trade is moving 10 cents. You're either making or losing 10 cents every movement. So that's what when you look at your balance, you gotta know, okay, can my account handle this? Right? Can my account every movement that happens, right? Can my account handle a 10 cent, movement? Okay, and my money. I'm reposting the link, right? Uh, so anything from 0.01 to 0.09 is considered to be a micro lot. So 0.01 is 10 cents, 0.02 is 20 cents, 0.03, 30 cents, 0.05, 50 cents, 0.9, 90 cents per movement. Okay, that's all lot sizes are. It helps you, this actually determines how much money you can make or how much money you can lose in these markets. All right, a mini lot is a point 0.1 lot, point 0.2 lot, point 0.3 lot, point 0.4 lot, point 0.11 lot, point 0.22 lots, right, point 0.33, etc. The value of a point 0.1 lot is $1 per movement in the market. All right, $1 per movement in the market. Okay, so of course you got to be able to have some money in your account if you trade out point 0.1 lot, right? Because it's $1 per pip. No, so 30 pips means $30. All right, 30 pips means $30. Yeah, a standard lot now is a 1.0 lot, 2.0, 3.0, 4.0, 5.0, etc. All right, 1.0 lots are $10 per pip. Okay, $10 per movement in the market. So don't be out here trying to put in a 1.0 lot on a $500 account because 500 pips, your account is dead. That's what I was doing back in the day. $500 on the account, 1.0 lots. All right. You see your account drain so fast. You lose 30 pips, boom, you lost $300. Don't do that. All right. Use proper risk management at all times, guys. Right? At all times. So here, right? So what we would do is we're gonna pick up, all right, next week. We're gonna go through some more. All right. Like I said, I hope you guys start connecting dots. Actually, your homework is go through this information within the university. All right. Go through this information within the university. It's gonna show you as well, how to calculate your risk. That video that I sent you as well, it's gonna show you how to calculate your risk. All right. I'm gonna go in depth, some more with that as well, right? To help you guys with this. I want you to be able to connect the dots, right? Connect, move from information to application. Okay. Move from information to application. That's what we're here. That's what we're gonna do. So with that being said, I want to ask one question real quick. If we did a 8 week, sorry, if we did a 2 week kind of I don't want to call it a boot camp, but like 4 sessions per week. Like we do 4 days back to back, bam, 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 bam. in 1 week, and then the next week we do 4 days back to back, bam, 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 right? Just taking you through this entire beginner process, right? All the information that you need, putting everything together, moving you along. How many of you guys will be interested in something like that, right? 1 hour each session, right? So, for example, Monday, Tuesday, Wednesday, Thursday, bam, 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 bam. We cover different topics. Next week, we do the same thing, cover different topics. By the end of that 2 week process, right, you will go from clueless to cashing out, right? You go from clueless to cashing out, right? We move you from knowing nothing, right, to having a solid understanding of this Forex market, right? So also we're gonna put a poll in the chat for that. All right, so look out for it. I'm also we're gonna let you know exactly when that will be, when we will do that, right? We'll have a chat with some of the other leaders and educators. Of course, I'm never going to be doing that by myself. All right, but we'll have some conversation, with some of the other educators and so forth, and we'll put that together for you because, like I said, I want to move you along. You can't be a beginner forever, man. Next time we put that poll, I want to see, some more people in advance. I want to see some more people in advance and just here for the vibes. All right, profitable trader and just here for the vibes. All right, that's what we want to move you all along. So then we can have some of you helping other individuals as well, educating, teaching, so forth, sharing your story with other people, inspiring other individuals, so they can understand that, yeah, this is a space that's really, about helping you, learn the skill of trading. I'm glad to see you guys will be interested. All right. So look out for that as well, so that when we do put that out, you respond, boom, and we get, that basically in motion, right? But I think it would be a good way to kind of fast track a lot of you, right? Really, because I know tonight helped you significantly, right? And what I want you guys to do for me a favor, go back into the chats and just like go in the main chat and just put, like something like how what you learned from the session or how the session was or something to inspire somebody to log on to the session as well. Because like I said, we got like 500 people in that chat. You know what I mean? We don't want just people just being a part of the community, just being in the community but not a part of it. You know what I mean? So, like inspire somebody else, just by your testimony. That's what we ask you guys for your testimony as well. So other persons looking on could be inspired, say, oh yeah, boy, when I'm plugging in, Carrie being plugging in, you're seeing Carrie getting the results, right? We see Jawan being on the calls, no, let Jawan getting the results, right? We see Raquel being plugged in on the call, Raquel getting the results, right? So that way you start to inspire other individuals, to do what's necessary, to go through the information. You just what you've been doing, like in terms of just going through the education, plugging into the different calls, and so on and so forth. All right. So with that being said, guys, that brings us to the end of this session. We were here for about just an hour and 24 minutes, right? About hour and 24 minutes, not long at all, but we covered quite a bit, right? And I hope, man, that you guys really go ahead and implement this information, right? Remember, like I said, moving from information to application. Don't disconnect anything. Keep everything connected in this process. All right. So with that being said, have a good night. Be blessed, and I'll see you guys on another call next week. All right. Have a good one, guys.